Louis Bishop started trading in 2008. He runs several small cafe and general stores. He's 50 years old. Business has been brisk in recent years, and he's now considering incorporating his business. So I believe I can see he's a sole trader, and he has got run several small cafe. He has got cafe and general stores, but he thinking to move all this into the business in the limited company, because he's talking about incorporating his business.
Exactly. Good.
The balance sheet of his trade business is currently as follows. All assets are shown at the market value. So here we will definitely have capital gains tax issue, because we have got freehold. We have got, yes, we have got freehold of fixture and fitting. I'm not sure.
Oh, yeah, so there's no CGT on fixtures and fittings.
Okay, thank you.
Yep, capital allowances.
Yes, definitely. We're talking about capital gains issues. And here we have to mention that there will be some issue with, not issue, some income tax implication with, because we have got fixture and fittings, yes, and stock.
Exactly. Agreed. Stock as well, that will need to be looked at. The debtors, creditors, you would ignore. Accruals, bank overdraft, that will all be retained personally. Continue.
Louis commenced the business as a startup with his own capital in December 2008 and draws up accounts to 31st of March each year. So we have, he started in December. Oh, this will give us some idea about overlap relief.
Very good.
Sorry, Amma, I lost your voice.
Yeah, no, I said exactly. That's very good. You noticed that there'll be overlap reliefs available.
They gave us that the overlap relief can be there. Yes.
Correct. The 4 months. The first 4 months from December to 5th of April 2009.
So we have got 4 months overlap relief. Will
exactly.
be possible here. Okay. Lou, sorry, can you scroll up, please? Scroll up the question. Yeah, thank you. Thank you. Louis intends to draw approximately 10,000 per month from the new company as a salary. The current and expected future business profit are approximately 50,000 per month. So here we need to consider now per month. He can have income tax saving here, because at the moment as a sole trader, he's taxed on all his trading income. When he moves into the business, he can see what he can withdraw from his business.
Exactly. He would have been chargeable on 50,000 per month, which is 600,000. But once he incorporates, he will only be chargeable £220,000 per annum. Now, £120,000 does not sit too well with me. Why? Because your personal allowance will be tapered, abated, and therefore the amounts between 100 and 120,000 would effectively be subject to a marginal rate of tax at 60%. Do you understand how we ended up at 60% tax?
Yes, because you're talking about that he lost personal allowances.
20%, yeah.
And yes, he lost, this 20%. And also he became an additional taxpayer because his total income is £600,000. So when he will be taxed on this above the 150.45, yes?
Correct.
But because he lost his personal allowances, it gave us no anyhow called free.
Yes, agreed. Good. Number three,
Louis has two sons, aged 24, 21, to whom he may hand over ownership of the company when he retires. Both sons work part-time in the business. So here we can talk about how it's easy to apply gift relief when he incorporated, because he can gift shares to his sons.
Yep, good. Anything else about the sons?
Sons work part-time, and possibly they will be liable for the business asset disposal relief in the future because they work in the company.
Good. Or would they be, if Lou gifted some of the shares to his sons, would there be any IHT implications?
You mean inheritance tax?
Yeah, correct. Inheritance tax.
I don't know anything about inheritance tax.
Okay, so
Yes, if
so
he
that's
gave away 7 years before, it would be no tax, inheritance tax.
exactly. So it'd be a potentially exempt transfer,
Yeah.
and if he survives for 7 years, then it would be
not
it would
how called, it would not form his how called trust estate. Thank you.
would not form part of his estate. However, if he does die within 7 years, then it will form part of his estate. However, business property relief (BPR) will be available if the company is still
Yes, I remember this business property relief. Yes.
if the company is still a trading company, then BPR 100% will be available.
Mm-hmm.
Okay.
Yes, one moment, please. Business, what is you said? Relief is what? When you gave away shares to your son?
No, BPR is, in your estate. So let's just say Mr. Lu passed away today.
Yes.
So for IHT purposes, you need to see, or you need to quantify all of his assets in his estate. Now, certain assets qualify for BPR, meaning is 100% exempt from the death tax, which is 40%.
All right. Mm-hmm.
So you literally look at his estate. If it's shares in a trading company, or if it's an interest in a trading partnership or business, it qualifies for 100% business property relief.
Okay. Mm-hmm. Okay. Louis is currently considering how best to structure the incorporation. In particular, he will be a director of a new company, but he's not sure whether he will retain the land and building in his own name or transfer them to the company. So here we can mention that he can give away some shares to his sons, but he has got control votes like over 30,000. So, and also we can mention.
Sorry. What was the 30,000?
It's not 30,000. At least 30% of shares to hold the control of the company if he wants to have a control of the company.
Is it 30%? I thought it's 51%.
51%. Oh, it is for EIS. Sorry, yeah. Yesterday I was reading about this EIS. Sorry.
Yep. Yes, it's 51% control.
So he can hold 51%, and the remaining he can share with his sons.
Yep.
So also he can retain the land and building, but he can't claim the incorporation tax relief. He has to consider different relief, claim different relief.
Yeah, which is
what a gift relief.
How will it work?
Gift relief. Do we have a goodwill? No, we don't have a goodwill. No, he can, if he wants to keep land and building, he has to probably, because it will be subject to capital gains, then he has to pay tax at the reduced rate because he will be qualified for business asset disposal relief.
Good. So he pays 10%.
So is it the correct one?
Yeah, exactly. So there's different things can be correct. There's different things that can be done, but what you've just mentioned is fine. The other thing is you, yeah. So you said that you keep it personally, and wait, no, say that again. Did you say you keep it personally and you pay you claim business asset disposal relief. Is that what you said?
Yes, because you will see he is going to incorporate everything. Oh,
But if you keep in the building personally, then
I'm with
there's no
you. Yes,
disposal.
it is not a question. Only capital gains will be if he considered to transfer the asset into the company. Okay, thank you.
Yeah. So when he transfers,
He's not considered.
it doesn't mention here, but you would mention goodwill. It doesn't specifically mention, but you would mention from your own side that goodwill would be relevant. They haven't given figures, but you would say the goodwill would be another chargeable asset, and then you talk about the whole goodwill and 20% because no BADR is available.
Okay.
You can make a claim to disapply, and just remember, incorporation relief is automatic. Yep. And then if you did want to keep the building personally, then 20% gain on 20% tax on the goodwill, and but then gift relief could be claimed on the goodwill element.
Gift relief. Okay.
And how does that work? Joint election, and you make the claim when? What's the deadline?
Up to 4 years after the event.
It's 4 years from the end of the tax year.
Yeah, when
following the incorporation.
4 years following the incorporation. Okay, 4 years after the end of the tax year following the incorporation.
Exactly. So it's effectively 5th of April, 5th of April, 5th of April, 5th of April. And then obviously for BADR is the anniversary of 31st Jan following the year of disposal. So you just need to familiarize yourself with these dates and times. And I think that will be good. If we have a bank overdraft, what happens to the bank overdraft?
It will stay with him?
Exactly. It stays with him personally. Do you understand the whole double tax charge on gift relief?
Gift relief, not exactly. Why you think it's a double tax?
So basically,
you mentioned earlier.
Yeah, I did mention earlier, but I'll just say again. Whenever you claim gift relief on incorporation, there's a double tax charge. For example, you have an office personally, and you incorporate I Limited. The office moves into I Limited. You claim joint gift relief. What does that mean? It means the company inherits the base cost of the goodwill, which might be 0. Okay. And you don't pay any tax charge personally. You don't pay any capital gains tax. Why? Because the gain has been rolled over into the base cost for the company, which is 0. Now, when the company, sorry, we shouldn't have used goodwill. Let's use an office. Okay. So same principle. Now, when the company disposes of the office, what happens is proceeds at the later date, market value proceeds, less base cost, which is lower. Okay, so a higher charge to corporation tax. Now, once the sale has been complete, the company now does not own an office building, rather they have £300,000 cash, for example. Agreed?
Yeah.
The proceeds. How do you take out the cash?
From the company.
Yeah, from the company by way of salary, dividends, etc., etc. So you'll be charged to income tax again. Personally.
Yes.
Did you see the double tax? One is corporation tax at 19% when you made the disposal by the company.
Yeah.
And then when you withdraw the cash proceeds, you'll be subject to income tax personally.
Now I'm with you, because the company, when the company will sell the building, it will be 19%. And also as a director, you wanted to take this cash from the company and you will pay income tax. Okay.
Exactly. However, if you claim the incorporation relief, you just reduce the base cost of your shares. You'd simply dispose of the shares, because remember, when you reduce the base cost of your shares, the market value of the asset is full, as in you don't reduce the base cost of the asset in the company. So you're fine there in terms of the 19%. You just simply make a disposal of shares, which will be subject to capital gains tax. So at least you're avoiding income tax as well.
I'm with you. Yes, when time comes, you will sell company shares, and then you can claim business asset relief.
Exactly. So do you have any questions?
No, thank you very much.
That's perfect. Let's leave it at that for today.